Hi guys, welcome to another series of our financial modeling course. So in this series we are talking about how to build a project finance financial model. So there are three series which we are doing currently. The number one series talks about a case study related to a company where we are building the the financial model for a well established company, and then we will calculate the DCA value, and then we will arrive at the DCA value or the enterprise value of a firm. Now, in the second series, we are going to cover the financial modeling related to a case study where there is a case study related to Cinepolis, and you are supposed to forecast the company's balance sheet, P&L, cash flow statements, and then you are supposed to calculate the value of a company. Now, if I talk about these two series, which I just mentioned in the video right now, so these two series are more concerned about valuation. Now, this third series, we are going to talk about project finance financial modeling, which is in reality a financial model, right? Now, what happens in real life is that many people tell you that, okay, so this is a financial model, this is not a financial model, so on and so on. Now, being an expert in this field and working in this field for more than 6 years, I can tell you guys that a typical financial model is divided into two categories. If I talk about in broader terms, the number one is related to the project finance financial models, and the number second is related to the valuation models. Now you can see like there are lots of free YouTube channels, or there are lots of companies who charge a hefty amount to teach you this, but what they are teaching you is just the valuation models. Now, what is the difference between a valuation model and a project finance model? Now, if I talk about project finance model, then project finance model is basically a financial model where you are supposed to build the model for a company who is going to establish its business. So there is currently no setup of the business. You are going to build a model in which you will have a construction timeline, you will have an operational timeline, you will have a, I would say, debt drawdowns, you will have share capital drawdowns, you will have capex, so on and so on. And at last you are supposed to calculate some key ratios like IRR, payback period, or you are supposed to do the sensitivity analysis of the companies. Now, this is the one financial model. I will just write it down so that you can remember it. So the number one financial model is project finance financial models. Now, the second financial models category are valuation financial models. Now, what happens in these valuation financial models? So, in valuation financial models, whenever we are building a financial model, the company is already set up, right? So for example, you can see on LinkedIn, you can see on multiple channels or social medias that people are posting that they had built a financial model for, let us suppose, Airtel. They had built a financial model for, let us suppose, Aisin Motors. They had built a financial model for, let us suppose, MRF, right? Now, these are not really financial models, these are just the valuation models or the equity models, right? Now, what happens in that, whenever you will see these models, wherever people post it on LinkedIn, you will see a common similarity that the model which they had built, that company is already established, and that company is either listed on the stock market, or that company is already having a good reputation in the market, or that company is already running its business from several years. Right now, what they do in valuation models is that they simply take the P&L line items, they simply take the balance sheet line item, they simply take the cash flow line items, and they project it for next 5 years or 10 years, right? But whenever you are applying for an interview related to financial modeling domain, then there are two kind of jobs. The number one is the jobs related to financial modeling, number second is the job related to valuation. Now, the models which these guys are teaching you, that is good to get into a valuation role. But if you want to go into hardcore financial modeling role, then you need to understand how we are building the project finance financial models. Right now, why one should go into financial modeling domain rather than going into valuation? The major reason is that valuation is very easy, and there is a very tough competition in valuation. So the demand is less, but the supply is very high. Now what happens is that whenever we have a higher supply but less demand, then obviously the prices goes down, right? Now what happens here is that if you are going into valuation field, let us suppose you join a big company and you are working in a position of, let us suppose, X, or you are working in a position of, let us suppose, analyst level 1, then the salary which a valuation modeler will get, that will be typically less than a salary that a typical financial modeler can get, right? Because the person who are working in financial modeling domain, who are building project finance financial models, who are reviewing project finance financial models, there the competition is very less. Because here what happens is that most of the teachers or most of the tutors don't know how to build project finance models, right? So what they do is that they will just tell you like how to build valuation models, and at last what happens is that um, as a student you don't know what is a real financial model, and you appear for an interview for financial modeling, and the questions which they are going to ask you, that questions will come as a surprise for you, right? So in order to avoid these circumstances, I will recommend you all to please shortlist your preferences, and on my personal suggestion, or as per my personal suggestion, I will recommend you guys to go into financial modeling domain where you are building the project finance models, right? Because that space is really I would say high paying job, and it is very interesting as compared to valuation modeling. I'm not saying that valuation modeling is a bad field or you should not go there, no. But as compared to valuation modeling, your project finance financial modeling domain is a better one, right? Now I will tell you one more thing. So whenever we are preparing a financial model, then there are certain criteria or there are certain guidelines which we need to follow, and these questions are asked in the interview, so please pay attention to this. So in this video, first of all, let me just tell you about like what are the guidelines of financial modeling, and then I will walk you through the case study which we are going to cover in this particular third series, right? Now I will tell you like what are the guidelines of financial modeling. So whenever you apply for a job interview, then this question is very common, that please tell me the guidelines of a financial modeling. So your answers should be very crisp and it should be very clear, right? So the best answer to give here is that your financial model should be fast standard, right? Now what is this fast standard? So fast standards stand for, F stands for flexible, A stands for appropriate, S stands for structured, and T stands for transparent. So whenever like you are building a financial model, you need to keep this in mind, that your financial model should be fast standard. Now what is a fast standard, guys? It is flexible, appropriate, structured, and transparent. Now what is the meaning of flexible here? So by flexible we mean that your model should be very flexible in the terms that if I change any assumptions in the model, then my model should be updated accordingly, and it is able to accommodate all the instances for which you had built the model. This is the meaning of flexibility, right? Then next we have a appropriate. Now what does this appropriate mean? So appropriate means that whenever you are building a model for, let us suppose, any particular business segment, if you are building a model for any particular sector, then all the revenue drivers, cost drivers should be particularly inculcated in the model, right? So you should always check that whether you are including all the revenue drivers, all the cost drivers in the model or not, right? Then we have a structured. By structure we mean that your model layout should be consistent, right? So let us suppose if you are having a seat, let us suppose there is a seat. I will just show you my Excel and I will make you understand this point. Let us suppose in my financial model, in one seat, let us suppose that seat is related to P&L statement, and my year one is at cell number E3, and then we have year two, so on and so on. So in all the seats, my year one should start from E3 only. So this is just an example, right? So your model should be very structured. That it means that there should be rigorous consistency in the model layout, and organization is essential to retain a model's logical integrity over time, right? Now, like a consistent approach is basically, I would say, to structure your workbooks, your worksheets, and formulas, right? And it will help you to save your time, right? Then next we have a transparent. So what do we mean by transparent here? So transparent means that your formula should be very clean and simple, right? You should not use very complex formulas, right? You should build a model in such a way that you should think कि जो सामने वाला आपका मॉडल देख रहा है उसको कुछ नहीं आता है, right? And just by looking at your model, he is able to understand the whole picture, and he is able to understand the whole thing in the model, right? So your model should be very transparent. There shouldn't be any hard coded numbers in the formula, right? Because let us suppose if I am calculating one line item, let us suppose revenue here, right? In revenue, let us suppose it is basically price into quantity. Let us suppose my price is equals to 10 into 5, right? So 5 quantity and 10 price, so it calculates as 50, right? Now this 10 into 5 I simply can't put in my PNL statement, because like the user of the model will be surprised like from where 10 is coming, from where 5 is coming, right? So you should list all these assumptions in your assumption sheet, right? So whenever in professional world, like I do a lot of modeling in my professional world, right? So what happens there is that we always divide our models into three broad categories. The number one categories is the inputs, number second categories is the calculations, and number three category is the outputs, right? So there should be like your model should be divided according to this particular order, right? Now if I say you like what are the next guidelines, so there is one important guideline. Let us suppose I am calculating revenue in this row, right? And let us suppose I am having my year from, like I have year one here, year two, three, four, five, six, seven, so on and so on, right? So there should be a one unique formula at the starting of the row, and I should formulate that formula in such a way that it can be copied across this row, right? So this means that there shouldn't be any formula break in your model, right? So this is again one of the most important guideline which can be asked from you in the interview. So you can tell them that for every row there should be a unique formula, which means that there shouldn't be any formula breaks. बाय दिस स्टेटमेंट आई मीन दैट जो फॉर्मूला आपका H7 में होगा, यही फॉर्मूला आप इसको ऐसे स्ट्रक्चर करेंगे सो दैट यू कैन कॉपी इट एंड यू कैन ड्रैग इट टिल कॉलम एन एंड यू कैन गेट योर डिजायर्ड रिजल्ट. ऐसा नहीं होना चाहिए कि you have a different formula in H7, you have a different formula in K7, you have a different formula in N7, right? So this means that you are just breaking the formulas, right? And breaking the formulas in a financial model is considered to be very bad, right? So what are the general guidelines? So the first guideline is that your model should be fast standard. By fast standard we mean that it should be flexible, it should be appropriate, it should be structured, and it should be transparent. Then next we understood that there shouldn't be any hard coded constants inside the formula. Next we understood that there should be like there should be a unique formula for each row, right? Which means that there shouldn't be any formula breaks in a row, right? Then the next thing is that you should use a particular color code throughout your models. By particular color code I mean, so for example if I can show you one of the example of the model which we teach here in our classes, in our, I would say, live classes or recorded classes, you can see that there are some color codes which I'm using so that the user of the model is able to understand it. So you can see that if my cells are highlighted in yellow, this means that these are input cells, so that the user of the model can come to my model and he knows that he only needs to temper the yellow highlighted cells. Then we have a white cells. White cells are basically formulated cells, so the user of the model understands that okay, I don't need to temper these white background cells, right? Because these are formula driven. Then we have a modulus input cell. So there are some cells which we use as a modulus input, right? And this I will teach you when I will start building this model, and there should be a particular color code for it, right? So that the user of the model doesn't do any tempering of that cell, right? Then we have a VBA output cell. So for example, if you are deriving any number or any result through the VBA, then your model should have a different color associated with it. Then we have a placeholders. By placeholders we mean that, let us suppose, so what is a placeholder? It is very important, guys. Let us suppose you are building a financial model and you know that your company can generate revenue through four different sources, right? So while calculating revenue, you say that okay, revenue from source one, revenue from source two, revenue from source three, revenue from source four, right? Now your manager or your client wants you to put a placeholder saying that there can be three more revenue sources in the future, so you need to accommodate it in the model. So what you will do, you will then write revenue source 6, revenue source 7, revenue source 8, and uh, you will just leave them blank, because right now you don't have any information, so that in future if there will be any revenue from those sources, that can be updated, and you need to highlight those colors, right? So those are basically placeholders. I will show you when I will teach you this particular case study, then I will tell you. So guys, if you follow these particular things, then believe me, your model is looks very clean and it is very professional. And believe me, whenever you are applying for any interview or whenever you are applying for any job, and if there is any modeling test, then the people who is taking the test or the company who is taking the test, they always check for these, whether your model is fast standard or not, whether your model has separate aggregation for inputs, calculations and outputs or not, whether your model follows, like, it shouldn't have any formula breaks, it shouldn't have any hard coded constants inside the formula, right? It should have a color code across the model which should be consistent across the model, right? So you guys need to take care of these things. Believe me, these things will never be told to you guys by someone else, right? But here at Finches, we always try to like train our students in a way so that he or she is able to crack their first interview only, right? So that there is no need to appear for second interview, or there is no need to like there is no need to think like, okay, so in interview there are some questions which I had never heard of, right? So our way of teaching is little bit different. Whenever we cover any topic, we always tell the important interview questions associated with that topic, right? So before starting the case study, you can see that I covered two or three most important interview questions, right? So guys, let's so these are some of the basic idea which I wanted to give you. If you want more idea, or if you want to like understand this in detail, and if you are not able to understand anything, then just write in comment section, or you can reach out to us. We will help you, right? So guys, let's start with our case study, the case study which we are going to cover in this particular course, in this particular series, right? So guys, before that, I will just like to highlight you guys that for series 3, your video will be uploaded on every Saturday or Sunday. So either of these 2 days we are going to upload the video, and every week we will be uploading one video, right? So there are 3 series. Series 1 video will be uploaded on Tuesday, Series 2 video will be uploaded on Thursday or Friday, and Series 3 video will be uploaded on Saturday or Sunday. And please don't get confused with the series. We are already trying to highlight it, right? So that the person who is reading it, he or she doesn't get confused. But again, if you face any confusion, then please reach out to us, we will help you out, right? So never hesitate to ask questions, never hesitate to reach out to the people from whom you are learning, right? Then guys, let's try to understand this case study. So this case study is basically a project finance case study, and believe me, if you understand this case study well, then you are in a good space of modeling, right? So guys, let's try to understand what this case study say. So this case study says that there is a company A which wants to set up a business, right? Now the company will deal in manufacturing projects related to the laboratory, right? So the company will be like manufacturing the products which are related to the labs, right? Now, as a starting point, the company is planning to launch two products, or they are going to produce only two products. The name of the products are sterilizers and incubators, right? Now the company is going to start its business on 1st January 2023. So guys, in real life, or if you are appearing for any interview, if you see that there is something important, right, and if there is some important information, then please start highlighting it, so that whenever you are building the financial model, you should have all the key assumptions highlighted, so that you are like you don't have to read it again and again, right? So there is one important information, that the company is going to start its business from 1st January 2023, right? So this means that company will establish its business from 1st January 2023. Then the company has hired us as a financial advisor and wants us to build a financial model for 10 years. So the projections is going to be for 10 years, guys. Then what we are supposed to do, we are supposed to calculate equity IRR from this project, and we are supposed to calculate the cash waterfall. Guys, if you don't understand the term cash waterfall, don't worry, I will cover this in this series when I will teach this. Apart, if you are not like if you want to read it before, then you can go to our YouTube, you can see a video related to cash waterfall, which is recorded by me only, and you can probably take a look at it. Now, then what are the key assumptions for the project, right? So the key assumptions for the project, so whenever you are doing any case study, the first thing that you should always look out for is when the business is going to get started. So in a project financial model, the first most important thing is like when the business is going to get started, which means that from when the company is going to start its construction, what is the commencement date, right? So in this particular case study, my commencement date is 1st January 2023. Then we have a capex timelines. Okay, so how for how many days the company requires, like for how many days the company requires to do the capital expenditures, right? So you can see that for land development, the timeline is for 26 months, a storage area is for 2 months, production area is 2 months, furniture, so on, so on, so on, so on, right? So this means that company total need 36 months for capital expenditures, right? And after 36 months, the company can start its operations. So if my business, or if my commencement date is from 1st January 2023, and if I take 36 months for my construction, then this means that my operations will start from 1st January 2026. Correct, guys? 36 months means 3 years, right? सो 3 साल इसको कंस्ट्रक्शन करने में लगेंगे। 1 जनवरी को इन्होंने स्टार्ट किया अपना बिजनेस, राइट? तो 3 साल कंस्ट्रक्शन में लगेंगे, तो दिस मीन्स कि 31 दिसंबर 2025 तक इनको कंस्ट्रक्शन में टाइम लगेगा, और 1 जनवरी 2026 से ये लोग अपनी ऑपरेशन स्टार्ट कर लेंगे, राइट? देन द नेक्स्ट इंपॉर्टेंट, I would say, the assumptions. What is the capital structure, right? So company को खर्चा करना है, right? Company पैसे कहाँ से लाए, right? Because if there is no money, there is no investment, right? So from where does the company can get its capital? So the company can raise its capital through two sources. The number one is debt, the number second is equity, right? And now what is the split between debt and equity? So debt is basically 70% of the total cost, and equity is basically 30% of the total cost, right? And we will arrive at the total cost when we will build our capex seat, right? So guys, what does this mean? This means that let us suppose कंपनी को कैपेक्स में 100 रुपए खर्चे करने हैं, तो 70 रुपए उसके लोन से आएंगे और 30 रुपए उसके इक्विटी से आएंगे, राइट? देन वी हैव a product assumption. So there are two products, always keep in mind. One is sterilizers, the second one is incubators. Sterilizers का market size है आपका INR thousands. INR K stands for rupees thousands. I am building this model in rupees thousands, guys. So market size is 1015 rupees thousands, right? Then we have a market share of 11.5%, which means that कि इस नई कंपनी का हम मान रहे हैं कि इतना अगर मार्केट साइज है तो इस नई कंपनी के पास 11.5% का मार्केट शेयर आएगा, राइट? देन वी हैव ए ग्रोथ रेट ऑफ 4.5%, which means क्या हर एक साल आपका मार्केट शेयर 4.5% बढ़ेगा. नाउ व्हाई दिस इज मोर लॉजिकल? बिकॉज जैसे जैसे कंपनी स्टैब्लिश होगी, बड़ी होती जाएगी ना, राइट, पीपल विल कम टू नो अबाउट देम, राइट, कि ये कंपनी है, ये सेल करती है, तो उसका मार्केट शेयर बढ़ता जाएगा, राइट गाइस? देन वी हैव अ प्राइस पर यूनिट. सो स्टेरलाइजर्स का प्राइस हमने माना है 25,000 रुपीज और 25,000 रुपीज पर यूनिट. देन वी हैव ए प्राइस प्रीमियम. सो जस्ट टू कीप द थिंग सिंपल, हमने प्राइस प्रीमियम अभी 0% लिया है, बट हम आपको फॉर्मुलेट करके दिखा देंगे हाउ वी कैप्चर प्राइस प्रीमियम इन आवर फॉर्मूलाज, राइट? देन अगेन इंक्यूबेटर्स के लिए कुछ एजम्पशंस है. देन वी हैव ए सीओजीएस एजम्पशन. सीओजीएस स्टैंड्स फॉर कॉस्ट ऑफ गुड्स सोल्ड, राइट? तो देखो दो तरीके के कॉस्ट होते हैं, लाइक, राइट, यू गाइज मस्ट अंडरस्टैंड और यू गाइज ऑलरेडी नो, बट अगेन आई विल जस्ट रिपीट कि जो कॉस्ट होते हैं, नंबर वन कॉस्ट इज रिलेटेड टू द cost which is dependent on the goods that you are selling, and the second thing are the fixed cost which is not dependent on the goods which you are selling, right? तो यहाँ पे देखिए direct materials we have 11,000 INR per unit for sterilizers. Labor cost we have 2.5 thousand INR per unit, and there are some other costs which is 1.5 INR thousands per unit. Then we have the same for incubators as well. Then there are some operating expenditures, right, which are not dependent on the number of units which you are going to sell or which you are going to produce, right? So we have a first the manufacturing staff salaries, which is 175,000 rupees per year. Then we have administrative salaries expense, which is 450,000 per year. Then maintenance of this much, R&D expenses, utilities, logistics, other expenses. And then we consider inflation in operating expenditures, except for manufacturing staff salaries. So for manufacturing staff salaries, we had not assumed any inflation, but for rest of the items, we assumed that inflation is going to be 2.5%, right? Then again, the most important thing, the capex assumptions, right? So we have listed down the capex assumptions. So the first capex is going to be related to the land, right? So we are assuming that the company is going to purchase the land, and what is the how much land they need? They need 5,000 square meter of land, and cost per square meter of land is 0.20 INR thousands. Then second, capex they are going to build for storage area. These are the prices, and this is the depreciation rate. Then land development cost we have something. So what are the capex, guys? First capex is for land. Then the second capital expenditure is for storage area. Then we have for land development. Then we have for production area. Now in production area there are some things, right? So there are work base, there are electric tool, conveyor. So these are the number of units, how much we require, and what is the cost per unit. Then we have furnitures and fixtures. Then we have utility equipments and connections. Then we have other capex costs, right? So these are the things related to the capex, right? Don't worry, guys. I will teach you how to set up the input sheet. I will build this financial model from scratch, and I will show you how we are going to calculate this. Don't worry. Then we have a debt assumptions. So what is when does my loan payment will be started? So it will start from 1st January 2025, right? Then what is the loan term? Loan term is for 6 years, guys. Interest rate is for 5%. Now there are two options of loans payments. The number one option is linear. By linear payments we mean, let us suppose up there is a loan of 1 lakh rupees and you are supposed to repay it in 5 years, right? Then under linear payment you will be repaying it 20,000 every year, which is nothing but 1 lakh rupees divided by 5, right? This means that every year you are going to pay linearly 20,000 rupees, right? Then we have annuity repayment, the most common repayment. जैसे you guys take home loan, you guys take personal loan, तो इन सब में जैसे आपका ईएमआई बन के आता है जिसमें प्रिंसिपल कंपोनेंट होता है, इंटरेस्ट कंपोनेंट होता है, तो उस बेसिस पे हम यहाँ पे रीपेमेंट हम यहाँ पे स्विच लगाएंगे. आई विल टेल यू हाउ टू क्रिएट स्विच, राइट? सो so that the user of the model, if they want to see the equity IRR on the linear option, they can see it. If they want to see the equity IRR on the annuity option, they can see it, right? Then we have a working capital assumptions, guys. Working capital assumptions, we have inventory for 90 days, account receivable 60, account payable 30 days, right? Then we have a tax assumption. So guys, tax again, we have a deductible loss carry forward. Don't worry about this term. I know this term is very new to you all, right? I will explain you when I will start building the tax, right? Then deductibility of loss carried forward on percentage income, again no need. Deductibility of loss carried forward on percentage of income, again no need to worry about. We will explain you, right, when we will start building the model. Then we have income tax rate of 2.5%, right? So we will plot this. Don't worry about it, right? We will change the income tax rate to 30%. It's very 30% or 20%. It's very less as compared to India, right? So we will change this. Don't worry. Okay, guys. So this is all regarding case study. Don't worry. We are going to teach you something good, right? Believe in us. And the skill set जो आप लोग डेवलप करेंगे आफ्टर दिस पर्टिकुलर सीरीज, particularly series 3, believe me, you are going to have an edge among the others in the market, right? No one teach these financial models or the project finance financial models for free, or even after taking the course, right? Or even after taking the fee from you, right? But we have made this available to you guys at free of cost, right? So just to give you a flavor of what is project finance modeling, we have started this. But believe me, this modeling technique is very important if you are planning to crack some big companies, if you are literally planning to go into some high paying jobs related to financial modeling, right? And if you have this skill set, believe me, you are going to have an edge among others, right? So guys, in our next video we will start. So in this video we covered about modeling rules. Then we tried to understand what is the difference between project finance financial models, and we understood what is the difference between like valuation models, right? And then we covered the case study, right? And then we understood that what is this case study talks about, right? And then guys, in our next video we will be setting up our input sheet from the scratch. And believe me, this model will be built from the scratch, so there will be several paths for it. And at the end of the series you will learn this skill, so don't worry about it, right? And guys, if you literally want to learn something good, or if you literally want to learn live through live classes or through recorded lectures, then you can join our courses where we are teaching financial modeling, that is sector specific modeling. So for example, real estate modeling, or infrastructure modeling, or solar modeling. Because right now what happens, I will tell you. So whenever you will see the job descriptions from the top companies like for KPMG or PwC or JP Morgan, अब क्या हो गया है, लोगों को बस मॉडलिंग नहीं चाहिए, राइट? सो दीज कंपनीज राइट नाउ डोंट रिक्वायर मॉडलिंग, दे रिक्वायर सेक्टर स्पेसिफिक मॉडलिंग skills. So if I can show you some job description from KPMG, you can see that उनको बंदे चाहिए, and they require someone who is having an expertise in um, I would say infrastructure modeling, right? Who is having an expertise in renewable modeling, right? So ये सब चीजें मार्केट में कोई करा नहीं रहा है, believe me. Some institute are charging you 50,000. Some there are some influencers in the market जो पहले आपको बोलेंगे कि फ्री है, लेकिन बाद में चार्ज करेंगे आपसे 50,000 60,000. So guys, don't fall in trap with them, right? Always see कि आप सीख क्या रहे हैं, right? That is very important, right? So guys, I will say कि अगर आपको literally if you want to learn this, then you can visit our website, that is www.finches.in. And from there you can raise a like you can explore our courses, where there is a flagship course named as financial modeling and valuations, where we teach Excel from the basics to advanced. Then we cover the financial statements, then we cover the ratio analysis, then we cover 4 different project finance models, right? So one will be the basic model, just to give you a flavor. Then we will have infrastructure modeling, then we have real estate modeling, then we have a solar modeling, and at last we will teach you the valuation, right? Which is basically DC valuation, relative valuation, pitch book, football field, so on and so on, right? And the best part is that it comes at a very low price, right? And it comes with at with 100% placement guarantee, right? So don't worry about it. It comes with 100% placement guarantee, guys, right? So that's it from my side in this particular video. If you have any doubt, you can raise your comments, right? I will just attach this case study into our uh, like video description. I will also mention my like website link, right? And if you have any question, you can reach out to us through YouTube comments, or you can simply go to our website, raise a query form, right? And we will contact you as soon as possible. Right, guys? So that's it from my side, and let's see you guys in our next video. Thank you so much, guys.